Altcoins are gearing up for what could be their biggest rally of this cycle, with Bitcoin dominance dropping for 4 straight weeks. The big question is, will this rally actually explode higher, or is the growing bullish hype starting to look a bit frothy? In today's video, we're going to check in on some of the key alt-season indicators and see how they've developed since we last talked about them. A few are flashing signs of exhaustion, while others are screaming for an explosive breakout. We will also break down how the strong move in the Russell 2000 index could be signaling ETH's march towards its all-time high. If that plays out, it could trigger an altcoin frenzy similar to what we saw back in 2021. As always, I'll present both the bullish and bearish setups in a neutral way so you can decide which side of the trade you want to lean into. Towards the end of the video, I'll also share my personal take on what's next for the market and exactly how I'm positioning myself for it. If that sounds good, make sure to tap that like button to support the channel. It really helps keep this no-nonsense research coming your way. And if you haven't subscribed yet, definitely hit that button so you don't miss what's coming up next. Let's get straight into it. First up, we will look at how ETH and the Russell 2000 have been moving in sync and how ETH acts like a leveraged version of the Russell, especially during risk-on periods. By the way, if you watched our previous video on ETH's next move and bought, congratulations. It pumped 50% exactly as we predicted. Alright, let's look at these two charts side by side. First, we have ETH, and second, the Russell 2000 index. At a glance, both are showing strikingly similar structures. Notice how both topped around November 2021, forming a clear macro peak. After that, they entered a long downtrend, bottoming out after over a year of pain. Now, what's interesting is their recovery patterns. Both charts show strong rallies off their bottoms, each correcting midway before continuing higher. For ETH, it has pumped nearly 160% from its local bottom around $1,400 to current levels near $3,700, and now it's eyeing that previous high around $4,800. If ETH manages to break its all-time high, altcoins will explode and Bitcoin dominance could crash hard. On the Russell chart, a similar V-shaped recovery is visible. After bottoming out around $1,700, it rallied back towards its prior range highs near $2,460, which is also its all-time high level. These similarities are not just coincidences. Both assets are risk-on indicators. ETH represents crypto risk appetite, while the Russell 2000 reflects small-cap equities, which typically outperform in risk-on environments when liquidity flows into growth assets rather than safe havens. Here's the key takeaway. If the Russell 2000 manages to break above its all-time high at $2,460, it signals strong market-wide risk appetite. Historically, whenever small caps outperform large caps, crypto rallies aggressively alongside. If the Russell breaks out, ETH is very likely to follow with its own move towards its all-time high and possibly into price discovery beyond $4,800. That should set the tone for other smaller altcoins, and Bitcoin dominance will likely drop below 60% at that point. So keep these correlations on your radar. They don't always align day to day, but on weekly timeframes, these macro correlations have guided major crypto rallies in past cycles. Now let's move on to some of the indicators we've been tracking to see how this potential alt season is shaping up. Let's kick things off with the ETH-BTC pair. We've been eyeing this chart for quite some time now, waiting for it to break through that crucial 0.30 resistance level. And it finally did. ETHBTC has broken above 0.30 and is currently holding just above it. By the way, I posted this ETHBTC breakout on X when it first happened, so if you're active there, definitely give us a follow to catch these updates in real time. Historically, this zone has acted as a major pivot point. If ETHBTC manages to retest 0.30 cleanly and hold it as support, it would be a strong bullish signal, potentially opening up a path towards the 0.35 target over the coming weeks. That would reflect growing confidence in ETH and set the stage for broader alt season. However, if it fails to hold this breakout and slips back under 0.30, there is a good chance of a deeper pullback down towards the 0.24 region, which has historically served as a solid support zone. For now, price action remains constructive, but as always, keep an eye on daily closes to confirm this breakout before positioning too aggressively. Moving on to the Altseason Index. This indicator recently spiked up to 59, but has since pulled back slightly to around 53. It's important to note that this 50 to 60 zone has been a rejection area lately. We saw clear rejections here back in April 2024 and again in January this year with that double rejection setup. Historically, a decisive break above 60 is what really ignites the alt-season engine, pushing the index rapidly into the 80s where we see broad-based altcoin rallies across the board. Until then, we remain in that tricky range where pumps stay selective and market rotations remain sharp and unforgiving. So keep this level on your radar, because if we break and hold above 60, it could set off a proper face-melting alt-season rally similar to what we saw in past cycles. Moving on to Bitcoin dominance. It has now closed its fourth straight red weekly candle, something we haven't seen since 2022. At one point, it dipped down to 60.5% before recovering slightly to 61%. This is significant because for altcoins to really deliver those face-melting gains everyone is hoping for, we need Bitcoin dominance to crack decisively below 60% and continue sliding deeper. Until that happens, altcoin rallies are likely to remain more project-specific rather than a full-blown alt season where everything pumps in unison. Next, let's talk about the long-term holder MVRV, a metric I always keep an eye on for cycle tops. Right now, MVRV is still sitting comfortably under 3.3, suggesting there's more room for this leg of the rally to extend. Historically, taking profits when MVRV reaches around 4 has worked out well. Selling altcoins when this metric crosses above 4 would have saved many from heavy drawdowns during both the March rally and again in November to December last year. This remains one of my primary signals to gauge market exhaustion and time exits with discipline. Finally, let's touch on open interest dominance, which is starting to get interesting. Currently, Bitcoin accounts for roughly 40% of total open interest while altcoins sit at around 35%. The gap is narrowing quickly and getting dangerously close to flipping. This metric matters because when altcoin open interest flips Bitcoins, it tends to be a reliable sign of froth in the market. Historically, this flip has marked local tops where taking profits or rotating back into Bitcoin has proven wise. If we see alt open interest overtaking BTC open interest in the coming weeks, I'll personally start tightening my stops and begin de-risking alt positions more aggressively to lock in gains before any potential flushes. Let's also touch on a macro risk indicator that often flies under the radar, the copper-to-gold ratio. Right now, it's showing some signs of exhaustion. For context, when this ratio moves higher, it signals that markets are shifting from risk-off assets like gold towards risk-on plays such as copper and equities, which is generally bullish for crypto as well. What we ideally want to see here is the ratio holding above its 20-week EMA for at least 60 days after the breakout. That critical deadline lands around August 18th. If it fails to sustain above that EMA, risk appetite could start fading across broader markets, and crypto would feel that pinch too. While this isn't a direct crypto indicator, it has shown strong correlations with major risk-on phases in previous cycles. Lastly, let's look at stablecoin dominance. It continues to drift lower, which is generally a positive sign as it shows capital moving into active positions. However, it hasn't yet retested that key 5.18% level we saw during the March and November rallies. If we get another revisit to that zone, it could quietly set up the market for another strong leg higher, similar to those previous rallies. So what's the takeaway from all these indicators? Some metrics like the ETHBTC breakout and MVRV score suggest that this rally still has room to run. On the other hand, signals like the Altseason Index getting rejected around 60 and copper-to-gold ratio showing exhaustion urge a bit of caution. Bitcoin dominance weakening looks promising for alts, but with open interest dominance approaching a flip, it's wise to stay nimble. Alright, so here's my current read on the market and how I'm positioning myself for what comes next. Overall, I remain cautiously bullish. While I do think this rally still has room to run, I'm also mindful that September often brings sharp pullbacks. Many are pointing out that a lot of altcoins are still down from their 2024 highs, and that's true. But for us, the focus was on accumulating strong large-cap alts during the April dip, and that's paying off now, with majors like ETH and BitTensor up nearly 2x from our entries. Personally, I'm planning to trim around 15 to 20% of these positions here. It's not because I'm suddenly bearish. It is simply part of my rotation strategy to lock in some gains and keep dry powder ready in case September delivers its usual dip. That said, if your bags haven't moved much yet, don't stress it. I still think there's more upside ahead, but trimming into strength helps keep your options open if we do see a sudden reversal. If you're still building positions, just stay patient and keep adding steadily without getting rattled by every wick or small pullback. For anyone looking to enter fresh positions now, I wouldn't be going in with full size. Personally, if I were buying here, I'd deploy around a quarter to a third of my intended allocation, then give it a week or two to see how price action unfolds before adding more. Chasing pumps rarely ends well. Markets tend to reward those who act with calm conviction rather than emotion. Stay disciplined and stick to your framework. And as always, none of this is financial advice. Use these insights to build your own thesis, remain objective, and size your positions based on what fits your personal risk tolerance. What's your view? Do you think September will bring a dump, or are we headed straight into up-only mode? Drop your thoughts in the comments below. I always enjoy reading your takes. Thanks for watching, and I'll see you in the next one.